Hello everyone, welcome to my channel Additional Source Income. Today we will talk about crypto trading. Make sure to watch until the end as I will go over understanding crypto trading and different types of crypto trading. If you're new here, don't forget to hit that subscribe button and turn on notifications so you never miss out on our latest videos. In today's rapidly evolving financial landscape, crypto trading has emerged as a significant player, capturing the attention of investors and enthusiasts alike. This video will delve into the essentials of crypto trading, exploring its fundamentals, strategies, and the tools you need to navigate this exciting market. We'll break down complex concepts into digestible insights, making it easier for both beginners and seasoned traders to grasp the nuances of cryptocurrency investments. Understanding crypto trading is not just a trend, it's a vital skill for anyone looking to enhance their financial growth. With the rise of digital currencies, having a solid grasp of how to trade can open up new avenues for wealth creation and diversification. Throughout this video, we'll discuss the risks and rewards associated with crypto trading, the importance of research, and how to develop a trading strategy that aligns with your financial goals. So, whether you're curious about Bitcoin, Ethereum, or altcoins, stay tuned as we embark on this informative journey into the world of crypto trading, equipping you with the knowledge to make informed decisions in this dynamic market. What is crypto trading? Crypto trading refers to the buying and selling of cryptocurrencies in order to profit from price fluctuations. Unlike traditional trading, which typically involves stocks or commodities, crypto trading operates in a decentralized digital environment. This means that transactions occur directly between users on a blockchain, rather than through a centralized authority like a bank or stock exchange. To understand crypto trading, it's essential to familiarize yourself with some key terms. A cryptocurrency is a digital or virtual currency that uses cryptography for security, making it difficult to counterfeit. Exchanges are platforms where you can buy, sell, or trade cryptocurrencies, similar to stock exchanges for traditional assets. Wallets, on the other hand, are digital tools that allow you to store and manage your cryptocurrencies securely. Popular cryptocurrencies include Bitcoin, the first and most well-known digital currency, and Ethereum, which is renowned for its smart contract functionality. By grasping these basic concepts and terminology, you'll be better equipped to navigate the exciting world of crypto trading and make informed investment decisions. Types of crypto trading. When it comes to crypto trading, there are several strategies that traders can adopt, each with its own unique approach and time commitment. One popular method is day trading, where traders buy and sell cryptocurrencies within a single day to capitalize on short-term price movements. This strategy requires constant monitoring of the market and can be highly rewarding, but it also comes with significant risks due to market volatility. Another approach is swing trading, which involves holding onto a cryptocurrency for several days or weeks to benefit from price swings. This method allows traders to take advantage of medium-term trends without the need for constant screen time. While swing trading can yield substantial profits, it also exposes traders to overnight risks. Lastly, long-term investing focuses on holding cryptocurrencies for an extended period, often years, based on the belief that their value will increase over time. This strategy is less stressful and requires less active management, but it may miss out on short-term gains. Each trading type has its pros and cons, and the best strategy depends on your risk tolerance, time availability, and investment goals. Choosing a crypto exchange. Selecting a reliable crypto exchange is a crucial step for anyone looking to trade cryptocurrencies. There are several factors to consider to ensure you choose the right platform for your needs. First and foremost, security should be a top priority. Look for exchanges that implement strong security measures such as two-factor authentication and cold storage for funds. Fees are another important consideration. Different exchanges have varying fee structures, including trade-in fees, withdrawal fees, and deposit fees. Make sure to compare these costs to find an exchange that aligns with your trading strategy. User experience is also vital. A user-friendly interface can make a significant difference, especially for beginners. Check for features like mobile apps, customer support, and educational resources that can enhance your trading experience. Popular exchanges like Binance and Coinbase are well known for their reliability and extensive offerings. However, it's essential to research the regulations governing these exchanges in your region, as compliance can affect your trading experience and security. By taking the time to evaluate these factors, you can choose a crypto exchange that meets your needs and helps you trade confidently. Risk management in crypto trading. Risk management is a critical aspect of successful crypto trading as it helps protect your investments from significant losses. Implementing effective risk management strategies can make the difference between long-term success and financial ruin. One common strategy is the use of stop-loss orders, which automatically sell your assets when they reach a predetermined price. This helps limit potential losses and allows you to exit a trade without emotional decision-making. Another essential strategy is position sizing, which involves determining the amount of capital to allocate to each trade based on your overall portfolio and risk tolerance. By carefully managing how much you invest in each trade, you can minimize the impact of any single loss on your overall portfolio. Having a well-defined trading plan is crucial for minimizing losses. This plan should outline your trading goals, risk tolerance, and specific entry and exit strategies. Common mistakes to avoid include over-leveraging, chasing losses, and neglecting to conduct thorough research before making trades. By prioritizing risk management, you can navigate the volatile crypto market more effectively and protect your investments. Analyzing the market. Understanding market analysis techniques is essential for making informed decisions in crypto trading. There are two primary approaches: fundamental analysis and technical analysis. Fundamental analysis focuses on evaluating the intrinsic value of a cryptocurrency by examining factors such as its technology, team, market demand, and overall economic conditions. This approach helps traders assess whether a cryptocurrency is undervalued or overvalued based on its potential for growth. On the other hand, technical analysis involves studying price charts and market trends to predict future price movements. Traders use various tools and indicators, such as moving averages, relative strength index, RSI, and Bollinger Bands, to identify patterns and make trading decisions based on historical data. Staying updated with market news is equally important, as the cryptocurrency market is highly influenced by external factors such as regulatory changes, technological advancements, and market sentiment. Following reputable news sources and social media channels can provide valuable insights and help you react quickly to market shifts. By combining both fundamental and technical analysis, along with staying informed about market developments, you can enhance your trading strategy and make more educated investment choices in the dynamic world of crypto. Conclusion: in this video, we've explored the essential aspects of crypto trading, from understanding different trading strategies to implementing effective risk management techniques. We discussed various trading approaches, including day trading, swing trading, and long-term investing, highlighting their pros and cons. We also emphasize the importance of risk management strategies like stop-loss orders and position sizing to protect your investments. Additionally, we covered the significance of market analysis, differentiating between fundamental and technical analysis, and the need to stay updated with market news. By combining these insights, you can develop a more informed and strategic approach to crypto trading. If you found this video helpful, we encourage you to subscribe to our channel for more valuable content on cryptocurrency and trading strategies. Your support helps us create more informative videos for you and others interested in the world of crypto. Don't forget to like this video and share it with friends or anyone who might benefit from learning about crypto trading. Engaging with our community is essential, and we appreciate your involvement as we navigate this exciting financial landscape together. Thank you for watching. Remember to subscribe and turn on notifications so you don't miss more videos from additional source income, money strategies, and much more. Check out my playlist and I'll see you in the next video. Take care